everyone, this is Samina Nalwala and you're watching the FNO show where we take stock of the derivative markets. But first up, a quick check standing out in trade. We have with us Ajit Mishra, now Senior VP Research of Religare Broking, joining in, and Jayesh Bhanushali, Research Lead at IFS Securities. Jayesh, it's been a while since we last spoke. This is Samina Hirani from NDTV Profit. Jayesh, how are you feeling about...
Ajit, good morning to you as well. Your view on the benchmarks?
Yeah, good morning, Ragam. So, we are seeing, a breather after this, 7 weeks of sustained up move. And the best part is that the rotational buying across sectors, which helped the index to maintain the positive momentum in the last 7 weeks, is still maintained. So earlier, we were seeing the frontliners, banking, IT, wages, helping the index to maintain the momentum, at least in the last leg. And now we are seeing the defenses, which are slightly on the back foot. Pharma, FMCG, they have taken the charge and helping the index to cap the damage. So we believe that any dip toward this range in the 21,200 to 250 is basically where one should look for position longs again, with 22,150 being the stop and 21,500 being the immediate target. And positionally we are in 22,000 plus zone. In the weeks to come. So overall, the buy index is something that we recommend to maintain until we decisively break 20,700 mark on the Nifty. For the banking index also, we are seeing a similar kind of a pattern. Earlier, we were seeing underperformance, but with the recovery in the private banking majors, we expect, this beta that we are seeing in the banking index is likely to end soon. 47,400 is the area that we are eyeing as a crucial support zone. So again, it's a buy on dip. With 47,400 being the immediate support area, and that should be the stop. And 46,600 to 49,200 is something that we are eyeing.
Right. Jayesh, welcome back to the FNO show. We are taking stock of what's going on in the derivative space, and let's talk a little bit more about the bank Nifty as well, where we have in fact for the past couple of days starting to see a little bit more unwinding coming through. It's not the case today, but overall, your index futures have certainly started seeing a little bit more, declines in open interest. Pardon me. Ajit, if you can come in on this one, how are you reading these cues on the bank Nifty, not necessarily just in the index futures, but also in the option space?
In the entire move, we were largely in tandem with the index for the banking part also. Earlier, we were seeing the phase of underperformance, and after this testing of 48,200 mark in the last two sessions, like yesterday it was the day of underperformance. Today we are also seeing a similar move. But the kind of price pattern that we have in the private banking measures, specifically Axis, ICICI, SDFC, that gives us comfort the downside seems capped based on the technical parameters. And as for the option parameters also, I don't see this, the index drifting strongly below this 47,400 mark. So that's the area basically where we are maintaining our stops for the long position. And upside, as we have recommended, that 48,600 to 49,200 is something that we are eyeing.
Jayesh, I want to talk to you about a few stocks, one of them being... with that, we'll also take our picks from our experts. Ajit, coming to you, I believe at least one of your picks is Voltas, and it's starting to already move. Can you take us through that one as well as granules, please?
Yes, I mean, you see both stocks, we have selected based on the price action that we are seeing. So Voltas, to start with, the stock after underperforming for several months, we have seen a very strong base formation around 72,890 area. And now we are seeing the short-term reversal. There is a possibility of short-term reversal also. As of now, we are just trading in that range itself, wherein 910, 920 is going to be the immediate target area. So 870 should be the stop. In case if you're planning any fresh trade at the current levels, and 910, 920 being the immediate target. Granules, as we were discussing about the sector rotation and now pharma taking the front seat. So among the pharma majors and mid-cap basket, Granules is one such name that has been consistently performing well after testing its long-term averages around 280 area on the weekly chart, and it has almost reached to its multi-year high zone. So we expect this momentum to extend further. Short term, 420 is going to be the area where it might take a breather. But broadly, we are anticipating 450 to 460 levels in days to come. So in granules also one can accumulate at current levels with 388 as stop.
Jayesh, what about you? What are your topics today?
So we have got two topics. First would be
Stock ideas coming in from Jayesh. So we did want to address Reliance Industries as well, and I'm going to take this up with Ajit. What's really happening with Reliance Industries is that it's currently trading at around 2,540 odd levels. Should we see more strength, it could break above its August 14th high, and that's where it's made a high of around 2,580 odd levels. Before that, it's gone all the way to well over 2,600 rupees per share. The question, well, we're not too far away from these levels. The question is, can we expect Reliance to in fact move about these crucial marks, crucial levels? Ajit, what's your view here? We're looking at a little bit of reversal, an upward move in the short term, an upward trend. Would you be bullish on Reliance, or do you think that it could potentially get into a resistance zone?
So Arun, that's right, that we are again inching towards this record high zone, and the last we witnessed in August 2023, and but of late in the last 3-4 trading session, if you have noticed that the cash volume has increased on the rising day, means the kind of participation that it should show in case if it's making an serious attempt of trend reversal or trend resumption, then the volume should also accompany. So as of now, it looks okay, means we can retest the record highs, but making a sustained up move seems difficult until we see the volume also sitting in line with the price action. So as of now, we feel that any level close to around 2570, 2580, traders, those who are holding long, they should book profit at least, and let the stock stabilize about 2600 mark for fresh entry, or any dip towards 2500 levels again to look for fresh longs. In between, it might consolidate again broadly in this range.
So sell at levels of 2570, 2580 if you've got long positions on RIL, and wait for a break about 2600 to initiate fresh longs. That's the word coming in on Reliance Industries. But with that, we're running out of time.